Okay, I'm going to take a look at Amazon. Big bearish reaction to earnings. It was down over 7% in the aftermarket. And, for Amazon, which is a 1.8 plus trillion dollar company, over 7% is a lot of money. That's over $100 billion. And I think it's upwards of $150 billion or so. So a lot of money evaporated on that down move in the aftermarket. We'll see where it's going to open tomorrow. As of now, it closed the aftermarket very weak with a little bit of a bear flag. It closed at a low of 3,330. Okay, we've got a little bit of a double top on the daily. We broke out above this clear resistance area. This was a big breakout on big volume, and now we're back below it, and that's pretty notable. That's a pretty notable move by the market. This is going to be a big red candle down to at least thus far, if it opens the way it closed the aftermarket, right around the middle weekly Bollinger Band. And it hasn't traded there since June 7. And you see how it's bounced off this 50-week moving average, this yellow line. It's held that yellow line for the most part all the way back since the initial coronavirus bounce. And if you look back before coronavirus, it was holding around that area all the way since 2019. And even if you look back to 2015, for the most part, it keeps bouncing off of this yellow line. That yellow line is pretty close by at 3,257. Now over here, it broke the yellow line pretty decisively and hovered below it for a bit, but then it had an inverse head and shoulders over there. So we're approaching that red line at this point as per the aftermarket action. Is this yellow line, is it going to hold again as a support, the 50-week moving average? That's a very clear support level. Other than that 50-week moving average, we're also looking at 3,170, which is the low of this area. And don't doubt yourself. It can absolutely go there, even though it's Amazon. I haven't seen, or I don't remember seeing Amazon drop over 7% before since the coronavirus. So that's a pretty big move for Amazon. It's over $100 billion on that move. So it's very notable. Now, what are we looking at tomorrow? Okay, so first, we're going to look at this support level. If somehow it happens to open higher, I highly doubt that. First support level, 3,499, right around that 3,500 mark. Next support level is that 50-day moving average, 3,452. Next supports levels are right around 3,390, 3,400. Now, it broke all those support levels, and it closed the aftermarket right around this 100-day moving average, which is the orange line. Now, it's going to be very overextended to the downside on this move, and I'm sure some people are going to look and think Amazon's a good buy, Amazon's down a lot, let's play the bounce. And it's very possible, but it's also possible it opens right around this orange line, the 100-day moving average, and drops towards that 200-day moving average, which is around 3,270, and even tests as low as this support, 3,172. So what's the cue as per whether it's going to bounce or not? On that first 5 minutes of the candle, you want to see if we get a big bull push on that first 5 minutes. Okay, let's imagine we got a clear board. First of all, you want to watch the pre-market. Are we getting higher lows and higher highs in the pre-market? Okay, is it starting to show strength and a bit of a rebound in the pre-market? Okay, for one. For two, when it opens, okay, this is the scenario you want to look for. You want to look for a big green candle, but I don't think you want to enter on that candle. You can risk it. I think you want to wait a little bit. You at least want to see a support develop, at least on the 1 minute chart. Then you could enter with a stop loss below that support. There's going to be a big volume spike that first 5 minutes. And then you want to see whether it breaks bullish out of that volume spike or whether it breaks bearish out of that first 5-minute candle. Okay? Now, if it breaks bullish, you want to watch it hold that level. You get the 5-minute candle, okay? You get a bullish break. You want it to hold above this level. Okay? If you see it get a bullish break above that first 5-minute candle and then instantly start flipping with big upper wick of profit taking, or right on the third candle, then it does a flip or sets higher highs without much follow through, you want to watch out for that. So you can enter on that second bullish candle if it breaks the first 5-minute candle, let's say. You put a stop loss below the low of the first 5-minute candle, and that's your exit area. And if it breaks that first support level, you would look for the opposite. Either a lower wick of buying the dip back above that support and then a second confirmation candlestick to show some strength and increasing bull volume, at least initially. Then that could say, then you get a clear support level, and then you could see if it could break that high of the day. So that first 5 minutes, that first 10 minutes, first 15 minutes for real confirmation, a break of that range in that time might signal the overall direction for the day. If we get a bullish, if we open low and we get bullish, we can be looking upwards of that 50-day moving average as a bullish target to bounce off that 100-day, upwards of that 50-day as a bullish target. If we can't hold the 100-day, then I'd be looking for that 150-day and 200-day as potential bearish targets. This is a pretty big breakdown over here. So it would leave me a little bit concerned, although I want to see how it reacts in the coming days or weeks to really get more of a gauge. But the fact that it's broken out of this pattern that's been forming since August, and now it's just going right back into it, and this was a big fake out, I do look at that as a pretty big red flag for Amazon. And you know, I would be bullish Amazon, but that would leave me at least somewhat concerned in the short term. And the key was not that the earnings were really bad. They didn't meet estimates. It's that they're seeing that there's competition now. That's the concern, is that Walmart, a lot of these other guys, there's so much competition in the space that it's actually becoming flooded, and they're taking some of Amazon's business and growth potential away, because a lot of people they're shopping on Walmart online, they're shopping with Best Buy online, they're shopping with Shopify online and whatnot. And it's getting kind of saturated, the e-commerce. There's eBay, there's Etsy, there's Pinterest, and all this kind of stuff. I know they're different, but e-commerce in general is getting a little bit saturated, and I think that's the concern with the stock, not necessarily that the earnings were bad. They didn't meet estimates, but the fact that they didn't meet estimates kind of says, okay, hold on. Why aren't we growing as much as we thought? That's a little bit of a concern, because this is still supposed to be a growth stock. You're paying a growth valuation for it. You're paying, last PE ratio that I checked. Okay, Amazon PE ratio. Just put Amazon as of Google 68, and it might change with this further report. Apple is trading at, a lot more attractive PE ratio of 28 compared to Amazon. And Apple is growing too. So why is Amazon so much more expensive than Apple? And Amazon also has a lot of debt on its books. And I think that's mainly for property, which would seem, let's just take a look. Amazon total debt, 100 billion, total liabilities, 227 billion. Book value per share is only $185. Amazon total cash, let's take a look. It only has since 2019. What about 2021? I don't know exactly how much cash they have right now. Wow, they got a lot of stuff in here. Okay. Here we go. Right now, as of this last quarter, they're saying they have 34 billion in cash on hand. Cash equivalents, and restricted cash beginning of period is 34 billion. This is in millions, so 34,155 million is 34 billion. So Amazon's pretty expensive stock if they're not growing or if competition is heating up. So this is where the concern is here, where Amazon's going to have to innovate in other areas in order to keep their dominance in the sector and grow in other ways. Let's take a look at Apple. Apple, apparently they got 112 billion in debt too, according to Google. But Apple has a lot more cash. Apple has 204 billion in cash. Google has 160 billion in cash. Amazon was just worth as much as Google almost. What's Google now? 1.82 trillion. Look at that. Amazon 1.82 trillion, which is a lot less now with this drop. It's 1.6 trillion, 1.65 or so. Apple has a lot more cash. Alphabet has a lot more cash. Microsoft has a lot more cash, and Amazon's worth around the same as these guys. Now they're saying Amazon 90 billion over here. So why on that statement did it say 34? Well, I'm not exactly sure over there. I don't want to keep this video too long. I was trying to do a little bit of a breakdown for you guys. I guess where I'm getting off at is this is why Amazon stock is down. There's some concerns in terms of the business and whether you should be paying this high valuation for this company that is supposed to be a growth company, but now there's concerns about its growth. So that is why the stock had dropped a lot, and $150 billion loss is not small. That's a lot. We're gonna have to watch those clues in the morning on the 5-minute chart to see whether it's going to be a bullish buying the dip opportunity or whether it's going to sell off even more towards that 50-week moving average. That's what we're looking at tomorrow. Sorry if I made this video a little bit long. I feel like I'm going off on a tangent on all these videos today and getting into a lot of details. And, I wasn't prepared to look at their balance statements and whatnot. So sorry about that. I should have planned that ahead of time. I didn't know I was going to talk about it. But thanks for watching, guys. I appreciate you. Remember to like this video, comment, and that's all. Have a good night.